All right, hey guys, I couldn't resist making a video just because of all the chop in the market in crude oil. I'm talking about crude oil. By the way, it's Tuesday, March 12th, 7 p.m., so the market's already open for the evening. Crude is just chopping, and I know it's so tempting to want to catch a swing, but I mean, there hasn't been swings where, a few, if you call this a swing, yeah, but you know what I'm talking about, like an actual swing with a long trend where you can just keep adding contracts and buy the dip and ride the thing. It's not happening, it's chopping. So this is really for the scalpers out there. And I've already done some of the homework on the longer time frame, so I'm going to keep this video extremely short. This is a 1 hour chart, no technicals, no moving averages, no nothing, just zones, simple price action. So this is really what I'm watching. You've got this level up here, this zone. Price cannot get any close up here. There's no candles closing up here. It's nothing but wicks up here. On the downside, you've got these two wicks over here, a double bottom. So those are the two boundaries. That's the playing field, so to speak, for scalping. This is it. And right through the middle, call it 78. I'm just going to show you the daily real quick, because that's 78 level. See right here on the daily? Look how these, nothing but wicks for 1, 2, 3. Well, that one was way up there. Multiple days of no traction. Then you got a little bit of traction below 78, but then look, the candle bodies are bumping right up into that 78 level again. And then now currently we're below that level. Just something to watch, that's all. So when it comes to scalping, I'm watching that level gleaned from the longer time frame daily chart, and it's on the 1 hour chart, but I make it a zone. And actually, I kind of want to, this zone is a little big. Let me see, I just want to slightly adjust this zone. I mean, unfortunately, that's just going to have to be like that. How big is that? Oh, that's 15 points. It's nothing. Just because we're on a 1 hour chart, it looks big. It's a 15-point zone in here. So here's how simple I'm keeping it. And I don't even know if I'll be trading this, but this is practice for me, so I'm sharing it with you in case there's a bunch of scalpers on here. What I do, simple. We got this known zone right here. If you can get an hour close above it, and if it can get rejected on a back test, go long and don't overstay your welcome. I mean, honestly, I'm just looking for 20 to 80 points a day. That's all I need, 20 to 80 pips a day, multiple contracts. Sometimes it might just be one contract, but generally I'm trying to trade more than that. Same thing on the downside. If this can get below here in the Europe session, I don't expect much on the Asia session. It's kind of a sleeper currently, but if you get something going in the overnight Asia section, let this thing come up into here and get a back test, go long, and try to get 20 to 80 pips to the upside. Same is true for in reverse. If this thing can get down here and then come back up and get a back test, short it, put a stop. For the shorts, the stop goes above the zone. For the longs, the stop goes below the zone. Don't be greedy. On the downside, what I would say is 77.30, because price has had multiple times getting rejected at that level. I think there's more room for, if it wants to go higher, there's more room for it to go higher because of all of these big, look at this big candle body. Now I know it's wicking up here, but still you have more room to gain to the upside. In other words, you're closer to the 886 on the upside before you get to any wicks. Whereas on the downside, man, you're right into the wicks. Before you even get to the 618, you're in the wicks. So if you're lucky enough to catch a short trade and it's coming down here, I would take off at least half at 77.30. Anyway, that's the deal. No technicals, no moving averages, no nothing. Just price and some zones. All right, cool. Good luck. See ya.